Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavlu, and we've got longtime fools, Lou Whiteman and Rick Menares, giving a 1 to 10 rating to the company that might be bigger in Memphis than Elvis. It's FedEx, ticker symbol FDX. As always, we'll rate FedEx's business, its management, and its financials. We'll talk valuation, and if there's time, fools, we'll play Armchair CEO, and we will top it all in about 12 minutes or less. So let's get to it. Rick, how do you rate the strength of FedEx's business, including factors like industry and competition? Scale is 1 to 10. 10 is invincible. 1 is hopeless.
Yeah, I went with a 6, and I sort of had to pinch myself like FedEx a 6. I would have never been that low a couple years ago. But getting back to FedEx, obviously the leader in parcel delivery, Fred Smith dreamed up FedEx as a business school paper. He wrote in Yale back in 1965 about a hub and spoke system to delivery. It became a reality 6 years later after he returned from Vietnam. The FedEx business, they were unique for decades, but now it's a cutthroat market. FedEx now competes with UPS, DHL, XPO, and that's just some of the 3-letter names. USPS kicks off the 4-letter ones. The industry got a boost early in the pandemic, and we're all stuck at home, and we need stuff delivered to us. But post-pandemic, reality's been sort of sobering. UPS, DHL, and FedEx, of course, have had negative revenue growth over the trailing 12 months. Lou?
Yeah, I'm at a surprise 6 too. I agree with you. I was surprised I was there, but honestly, is a lot to like here. For all the talk of AI and the digital economy, there's still a massive need to get stuff from point A to point B, and there are very few companies out there that have the resources to do it on a global scale efficiently. FedEx is one of those few. But as you said, Rick, there's a lot that can go wrong. Demand is cyclical. The costs of these planes, trucks, warehouses are all fixed, and they are massive. This is not a high margin industry. FedEx has some competitive advantages over UPS when it comes to labor because it's largely non-union, but you still have to pay competitive wages. One part of the business to highlight here is Genco, which FedEx bought in 2015. Genco is in the business of reverse logistics or e-commerce returns. That's a particularly tricky and pretty high margin part of this logistics world. Genco gives FedEx a strong position in that important market, which is an advantage they have over a lot of their competitors. But fools need to understand there are real limitations to the profitability of this business just by the nature of all the assets they have.
It's a great scoreboard for me because it sounds like you all are in the same boat where you just feel like FedEx should be a little better than it actually is. Maybe it was because I remember getting a FedEx envelope with my first offer letter kind of after college, like to the place I went to. Maybe there's a halo effect there, but let's see how it rates beyond just the business. Let's talk about management. Scale of 1 to 10. 10 is Warren Buffett. 1 is Homer Simpson. What do you have, Rick?
Yeah, I'm going with a 7. So there aren't too many founder CEOs that started companies in the early 1970s that are still standing. And we lost another one here when Fred Smith stepped down as CEO 2 summers ago. He's still there as executive chairman. He didn't leave us, but it's Raj Subramanian. I'm sorry, Raj. Subramanian. I'm sorry, Raj. As CEO, says I tried to fix myself and I made it worse. So as CEO since the summer of 2022, he's not new to FedEx. He came in as an associate marketing analyst in 1991, worked his way up across various roles. I like that. I like when someone becomes a CEO from the inside after decades there and gets a taste of everything that the company's about. That usually works out well. However, and the reason I'm down as a 7 is because revenue has declined in each of his 2 first years as CEO. I don't like that.
Yeah. Well, we'll just call him Raj. But I'm at an 8 here. Rick, I agree with a lot of what you said here. Replacing a founder is never easy. But when you've spent 30 years at the company learning the business and you were, Fred Smith's obvious choice for a long time, that does make it easier. The hardest thing about replacing a founder CEO is sort of breaking from what they did. Fred Smith was a very, very opinionated, entrenched CEO. Raj, to his credit, has done a good job of taking a critical look at this business, trying to find ways to improve. I like the Drive cost-cutting plan. It's the right strategy, though it is painful. I'm not going to really ding him on the revenue because that is a cyclical thing and that is the macro thing. I really believe FedEx investors are in good hands here. This is probably my favorite thing about this company is that management and the team that just really smart people doing this. Solid 8 here. There's a lot to like for me.
And hey, maybe Howard Schultz will come back and Wait, that's the wrong company. Never mind. Let's go to financials, Rick. Scale of 1 to 10. 10 is a fortress, 1 is yikes.
Yeah, I went with a 6. So year-over-year revenue growth has been negative in 7 of the last 8 quarters. It has a debt to EBITDA multiple of 2.3. That's higher than UPS at 1.9, but lower than DHL at 2.5. FedEx's yield of 2.1 is less than half of what UPS and DHL are paying. But the FedEx dividend is sustainable. It's questionable whether it's sustainable for UPS. But things aren't going that well. So FedEx had disappointing financial results in September. It lowered its guidance. Analyst profit targets that they're moving lower. They're going the wrong way in recent months. FedEx sounds like an alimony payment. And right now, I'm divorced from its near-term prospects.
So I'm slightly better. I'm at a 7, mostly because, like, if you compare this with a lot of the truckers, a lot of the things we've seen, FedEx's numbers look, if not, better, but or at least only as bad. Look, it's been a lousy few quarters, no denying that. But the company has $6 billion in bank, as Rick said, about 2 times debt to EBITDA. That's really good for the bottom of the cycle. And I do believe we're in the bottom of the cycle here. I don't see much to worry about. No reason to believe that dividend currently yielding about 2% is in danger. The question, again, is down to profitability. 7 is the best I can do here, just because I think even as things recover, and they will, there are real limits to what can be charged and what profits can we make. I don't see any worries here, but I also have to acknowledge just the realities of this nature of the business, and it's 7's about as best I can do.
I heard bottom of the cycle potentially here from you, Lou. So let's talk valuation. Let's see how well FedEx's stock will do over the next 5 years, at least what you think, and how safe it is. 10 is a sure thing. 1 is a lottery ticket.
You read my mind because, I'm at a 10 to 15% growth here, and that is only because of where we are in the cycle. FedEx shares have underperformed the market over the last 3 years, really underperforming this year. I believe over time, this is a market matcher or a slight market beater. If you put the market about 7%. So I'd normally just over time, I may be in the 5 to 10%, but given where we're starting and where this 5-year period is starting, I think that there is a recovery to be had here. So I wouldn't be surprised over 5 years you see them doing better than this, than, just tracking the market. As for safety, it's an 8. As I said before, the financials, there's no question in my mind about FedEx disappearing. They're not in any trouble. The question here as an investor is, do you want to take these long-term returns on a business that is capital constrained? But this is safe. This is FedEx. This is reliable.
Yeah, I went with 5 to 10%, just below Lou, but again, clearly better than you would think a stock that we started to sit down on. The near-term challenges, they're real, but FedEx is a survivor. If there's a shakeout, I know it's going to come out ahead. Right now, it's in a bind because business is sinking, operating costs are rising. But look at the 3 to 5 years, as Lou did and I'm doing now, and I think shareholders, they're going to be okay. So FedEx is trading for less than 15 times this new fiscal year's earnings estimates and less than 12 times next year's target. Will it get there? Well, again, those estimates have been trending lower, so maybe not, but the valuation is still reasonable, and I think FedEx is eating its own cooking. Its share count has declined for 3 consecutive fiscal years, improving profits on a per-share basis. Safety, like Lou, I gave it an 8. It's FedEx. How can I forget that?
I think we can zoom through Armchair CEO. I think you guys might have some interesting answers. So Lou, if you're running it, what are you doing with FedEx?
So they're kind of doing this already, so this is more of an affirmation and a change, but you need to ignore Amazon. The low end of the logistics market has become a bloodbath. The answer is higher margin specialty logistics, healthcare, areas like that, express business. Let e-commerce top off your trucks, but don't focus on that. Focus on better margin businesses and kind of let Amazon do its thing.
I want to talk about FedEx Field. So FedEx, they've been named Fortune's most admired company for 24 consecutive years. It's probably just a coincidence that that's when they took naming rights. They paid $205 million for a 27-year deal for naming rights in 1999. But they opted out. They pulled out of it 2 years early. They were able to do it when Snyder sold the team, which probably would have been the best time to tie yourself to FedEx Field. But again, lousy timing. The Commanders started out 2027 in fine fashion with what may be the best rookie quarterback of this year. And there's still the FedEx Forum in Memphis, where the Grizzlies pay closer to home. But I think really they could have been paying $7.5 million a year for naming rights. Now I think it belongs to like a credit union or something. I'm not following the Commanders this year, but I think it's ridiculous that they let go. I know you can't get it back, but you need to still have your name out there. FedEx is FedEx, but it's important to be out there.
Wow, that was a pro argument for naming rights to a stadium. I like
Yes,
it. Very
you don't hear those.
contrarian.
Yes.
Let's go move on to Top It. Lou, is there a company in FedEx's space you like better?
Fools, you know where I'm going here. As long as it is a public company, and that we'll see how long it is, but I mentioned Reverse Logistics. GXO is my favorite e-commerce logistics stock. They are the ones handling all the shipments for Apple, Whirlpool, Nike, so many. They are an expert at this reverse logistics. I own it over FedEx. I'd buy it over FedEx. It is my favorite company as long as it's out there.
I went with Amazon, which obviously is not like a Venn diagram of FedEx and Amazon is not really matching, is overlapping too much. But to me, it was 5 years ago that Amazon and FedEx parted ways. And it was actually FedEx that said, hey, Amazon, you're becoming a competitor. I don't think we should be in this partnership anymore. But the thing is, since then, Amazon only became stronger. And FedEx revenue in those 5 years up 25% over the past 5 fiscal years. Amazon's revenue has more than doubled. I still think that FedEx is a winner over the long term, but I think Amazon's done a lot of smart things. And again, as a fulfillment, as a place where a lot of small merchants, vendors, and entrepreneurs can sell stuff through the Amazon program and their fulfillment center, which works. I just like Amazon as an investment right now and as a player in this field.
Thank you to both Rick and to Lou. They've given FedEx an overall score of 6.9 out of 10, a bit shy of UPS's 7.2. And I talked to our dividend gurus, Matt Argersinger and Ant Chavone, earlier, and just to confirm, and yeah, they like UPS better than FedEx as well. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a cruise ship operator. Till then, Fool on.